had enough and demanded that environmental laws be passed. Britain and America soon passed their first Clean Air Acts and Clean Water Acts to regulate the worst of the abuses. Industry was forced to pay for pollution damages and install expensive pollution treatment equipment. Companies who failed to comply with the laws were shut down or forced to pay fines, and their profits plummeted. A lot of them started moving their production to factories in China and developing countries, where environmental laws were less strictly enforced. It became clear to everyone in business that protecting the environment was a cost, plain and simple. So the battle lines were drawn, with business on one side and environment on the other. Would we always be forced to choose between the two? The laws did help the environment a little, at least in the developed countries, but the story doesn't stop there. There was another movement in the 60s that brought conditions to a head. Cheap production had already gotten ahead of what people even wanted, so they needed a way to increase demand. Advertisers and marketers put their heads together and consumerism was born. More and more cheaper products appeared on the market, designed to last for short times so more could be sold. Production increased, and with so much of the manufacturing already happening in countries with little environmental enforcement, environmental impacts got worse, not better. One multinational company set up a chemical plant in Bhopal, India, ignoring safety regulations and working with oversized tanks of deadly poisonous chemicals next to the homes of 1 million people. Late one night in 1984, a tank ruptured, releasing the toxic chemicals into the air of the city. Panic broke out as people woke up in clouds of poisonous gases that burned their lungs and killed 20,000 people. It became clear that government regulations alone would never be enough. Businesses had to find their own reasons for pursuing sustainability. One reason was that energy and resources started to get expensive. In 1973, war broke out in the Middle East. Oil-producing nations closed the pipelines, and gas tanks around the world hovered on empty. People waited in line at gas pumps for hours, only to find the pumps empty by the time the line finished. Oil prices shot up to 4 times the original price and stayed there for a decade. The stock markets crashed, and business ground to a halt. Today, the oil prices are even higher. It was a wake-up call. Some companies realized they could save money by using less energy and materials for their products and services. These companies were starting out on a new stage of the journey by choosing to do more for the environment than the law required. They were taking their first, cautious steps towards sustainability. We call them the tiptoers. Saving money wasn't the only reason. Companies also had their reputation to think about. If people believed the company was helping out in their community, making safe and healthy products, and treating their workers fairly, it would improve their reputation and give them more customers. If people felt the company was poisoning the environment, using dangerous chemicals in their products, and abusing workers, they would look bad and lose customers. Since so many companies had already moved their factories overseas, there was nobody to police them, so the corporations were responsible to police themselves. They called this corporate social responsibility. So they made a special new department in the company, the Corporate Social Responsibility Department, and gave them the job of making the company socially responsible. The CSR departments did great work, donating money to build schools, contributing to local charities, organizing community events, and tree planting. All good news. The only problem was, it wasn't really helping that much. Sure, the companies were saving a bit of energy here and there, but that was never going to get them off fossil fuels entirely for truly sustainable energy, not to mention dealing with waste, toxics, or labor issues. And the CSR departments couldn't help much, since they were separate from most business operations. So while the CSR departments were off planting trees, the rest of the company was doing business as usual. And they weren't even breaking even on the money they were paying for CSR. When they asked hundreds of tiptoer companies about it, less than a quarter said their sustainability investments were paying off. So far, the sustainability journey wasn't looking so good. If it just meant companies changing their light bulbs and planting a few trees, it wasn't ever going to get us anywhere, and it wasn't even making money, so companies might as well save themselves the trouble. So is our journey towards sustainability over? Not quite. You see, all those problems that made us care about sustainability in the first place haven't gone away. In fact, they're getting worse, and more people are starting to pay attention. First, the governments are still pushing companies, and the regulations keep getting stricter, even for companies that moved all their factories overseas. When European regulations required electronics companies to recycle their products when people finish with them, that affected every company that wants to sell in the EU, even if they're from China or America. Second, the investors are getting involved. If a company is about to get fined by the government for pollution, or have its reputation ruined because of an environmental scandal, the investors could lose a lot of money, so they want to know the risks. The Carbon Disclosure Project pushes companies to disclose their climate change risks, and it has a lot of muscle behind it. It represents investors with $71 trillion under management. That's more money than the entire world's GDP in 2010. Third, employees want to work for companies they can believe in. The best job candidates are now looking very carefully at companies' sustainability track records. After all, if you got good enough grades in school to choose the company you worked for, which one would you choose? And most importantly, consumers care more than ever about buying from companies that do the right thing. Many of them care not only about product quality and personal health effects, but about the impact of the company on the environment and society. Marketers have come up with a name for this segment. They call it LOHAS, Lifestyles of Health and Sustainability, and it has become a major influence on how companies market their products. In this new landscape, some companies see sustainability